if we start measuring numbers like 60-70% of central banks' balance sheets into gold, we're going to be talking about insane numbers of gold prices. They can either do it through revaluation of gold or just accumulation of the metal, and both things would drive the prices a lot higher. So, and silver is extremely volatile, so it won't be as stable as gold. I mean, we're going to see big spikes and big declines. So, you got to be very careful of how to manage a portfolio with that type of exposure. But today we're just extremely cheap and just gaining momentum for a major breakout. And once we see that, we could see triple digits in silver. I mean, yes, it would be very plausible to see that, in my opinion.
Gold and silver markets are once again at the center of global attention, as central banks consider increasing their balance sheet exposure to gold, potentially up to 60 to 70%. The long-term implications for price discovery could be massive. Such a move would not only reshape the monetary landscape, but also drive gold valuations to levels never seen before. This shift could occur through direct revaluation or gradual accumulation, both of which would fuel higher prices. Meanwhile, silver presents a more volatile picture. Unlike gold, silver is prone to sharp surges and steep declines, demanding careful portfolio management for investors seeking to capture its upside. Currently, silver remains historically undervalued, yet shows signs of building momentum toward what could be a significant breakout. Analysts suggest that if this momentum continues, the possibility of silver reaching triple-digit prices is not just speculative but plausible, positioning it as a unique opportunity in the precious metals market. Tavi Costa is a renowned global macro strategist recognized for his in-depth insights into commodity cycles and monetary dynamics. With years of experience tracking market shifts, he highlights the forces that could redefine the role of gold and silver in the financial system. If you found this helpful analysis, don't forget to like this video, subscribe to the channel, and share your thoughts in the comments below.
Yeah, well, I think we often talk about the 60-40 portfolios, which is mostly, regarding the large institutions globally, but central banks are the ultimate size of capital that needs to be deployed somewhere. And when you start seeing, that level of accumulation of the metal, especially over the last few years, relative to how much treasuries they own, which, as it shows in the chart, we just surpassed that gold reserves. I think it's just the beginning. I really do. I think we're going to go well above the 1970s peak. 1970s is not a good analogy. I mean, the imbalances we have today are way worse than what we saw back in those days. And so you would suspect that in order to reattract discipline again, monetarily and fiscally at some point, first, I do think we actually have started to acknowledge, of course, that the problems of complete lack of discipline has taken place for a long time, and therefore why gold prices have been moving. But the first step towards after the acknowledgement is the accumulation of gold itself. And so this is just the beginning. If we start measuring numbers like 60-70% of central banks' balance sheets into gold, we're going to be talking about insane numbers of gold prices. They can either do it through revaluation of gold or just accumulation of the metal, and both things would drive the prices a lot higher. So I think the metal is that the bottom line is that the metal is extremely undervalued despite the major run that we have recently here, and that's why a lot of people are trying to look for these little corrections here and there, and they're just not happening because we're way too far from where gold prices are supposed to be from a central bank standpoint. So, and central banks don't think about RSIs and technical analysis. They think about accumulating the metal, securing metal in their balance sheets and so forth. And so this is going to be an interesting world we're entering, and you have to act accordingly, meaning, if gold prices are likely to be a lot higher, then what does it mean for other metals? What does it mean to companies that are involved with that and other things as well? Look, I'm going to take the other side of this. I don't know anybody who in the right minds would actually be buying gold and letting it stay in China. That just seems like something I would never do it. I don't know anybody who would do it either. And we could be talking about some sort of cooperation across countries that are accumulating gold and want to form a monetary. Sure, there's all sorts of possibilities in that sort of ideas, but that we're going to see major economies storing gold in China just seems like something I have a hard time believing. I just don't even, I'm from Brazil. I don't think Brazil will keep their gold in China. I think we're in a world where everyone wants to store their own metal. And the whole reason for why gold is getting attention is because they want something neutral that has no link with any other economy. Now, at the moment where you're holding your gold at another country, there's clearly a strong link between you and that economy. And I don't think that's the whole idea of accumulating gold in a central bank balance sheet. So I'll take the other side of that. I do think that central banks and sovereign institutions are starting to figure out what the mining community has figured out a while back. And that is that accumulating gold itself is expensive, right? You're buying at prices that they are in the market right now, over 3,500, 36, 37, 3,800. And the cheapest way to accumulate gold is actually buying gold underground, right? And so not above ground. And so, of course, there's operational risk and other things that get involved. But today, at these metal price mining company prices, these projects are so cheap that allows most of these institutions to provide different types of programs, streams, royalties, or prepayment deals that can allow these institutions to get access to ounces much cheaper, assuming they can find operators to operate and get and produce the gold itself, which there are plenty out there. So I think that's the next thing that it's happening. We're starting to see, I'm in the business of acquiring mines, and I see the sovereign money is certainly entering the space. And we saw recently a report from the White House that is actually starting to partner with Orion for a fund of $5 billion to invest in critical metals. That's those moments, and gold is considered a critical metal. So those are, why buy 100,000 ounces of gold in the market when you can just mine it and have a deal for much cheaper to produce the same metal. So I do think that that's going to be more likely to occur. I think it's mainstream in regards to perhaps more some of the money managers. Gunlock is a very clever money manager, and the fact that he's saying that, to me, is certainly validation of a thesis rather than maybe the end of a trend. Morgan Stanley less so, but I don't, I think the big question of 60-40 portfolios, as they call 60-20-20, to me, it's more obvious now, given where gold relevance has taken over the last few years, that we shouldn't be owning only 40% of our conservative pack into bonds, and we should divide that up and have some gold. I think that's starting to become a very conventional opinion. The issue to me is on the 60 side, where 60% of equities, 70% of that is US. And that needs to change at some point. That's why I'm so bullish on emerging markets. And eventually we're going to see that transition as well. That's going to become a discussion. That's the discussion for 3 years from now, maybe 1 to 3 years from now. I'll be back here and we'll talk about that. But yeah, so I think a lot of institutions, if central banks are about to cross 25% or so of ownership of their own balance sheet, it is just a matter of time to see all these other institutions follow the same idea. Usually central banks have sort of a way of leading the market in that sense. Sure. A lot of people, for them, it's very difficult to acquire an asset in a large way before seeing some level of price movement that gives them conviction it's going to work, because it has been working already. And we have to think about from an inflation standpoint, if most of these government bonds are trading with about 4 to 5, 3 to 5% yields, right? And that's the range we have today in the whole yield curve. And that just seems, that's probably not right given where inflation is. I mean, if anybody here believes that inflation is only running, sub 3% today, as the government data says, I really don't think that's the case. I mean, commodities alone are up about, double digits, about, 15% over the last year. That's real inflation. And so if you think about it, the fact that gold is up double digits, it's just keeping up with the actual inflation. And I think that in the next 10 to 15 years, we have triggered a inflationary era. And as you hold bonds, having a 4 to 5% yield on your investment is just not enough to protect you from the inflationary problems. And gold is just as liquid as treasuries, if not more liquid, especially in the world that we're living today, where bonds actually sell off when equity markets go down. So they're not really protecting you on the downside as much as they used to in the past. So it's a world that things are changing. The dynamic of how to build a portfolio is changing in a large way too. And I think it's a matter of time for the derivatives of gold also to become a very significant portion of these portfolios. The moment you start pricing things, from a securing standpoint, the same thing will happen with mining companies. But the moment you start thinking about all these central banks, they have to own gold because of their issues, their imbalances that they're facing. It changes the dynamic of how you price things. And you're not talking 4,000, 5,000 anymore. You're talking, multiples of that amount. And that's probably the world we're going to get into in the next few years. Well, it's funny, when I said that, somebody questioned that and tried to, get me to answer the question of like, why would any central bank would buy silver? And that lacks to understand, in my view, the meaning of silver itself and the monetary system and its history as a monetary metal, that it is normal that people are conditioned to not consider that as a possibility because we haven't seen that in a very long time. Ultimately, a major gold rush that we're seeing now, we should call this what it is. It's a gold rush. And if we're seeing that, eventually we're going to see a silver rush, in my view. And that silver rush, it's not driven by industrialization and all that. I mean, while I think that's a great thing for silver and it's going to create demand, it's going to be, solar panels, and silver is used in a lot of technology devices and so forth. Great. That's all a plus. Wait until you see the monetary aspect to start really being priced in the metal. That's not a $45 ounce, asset. It's way higher than that. And the fact that we're seeing silver approaching new highs with the gold to silver ratio still at 80, it's one of the most bullish things I've seen. And instead, a lot of investors are seeing gold prices go up 2% and silver goes up, 0.5%. And they're discouraged. And they're thinking that this is, the silver has lost its shine and it's not worth what it used to be and so forth. I love it. I think it's one of the most attractive investments I've seen in my career. And the fact that you can get leverage to silver by owning a mining company that still produces silver sub $20 an ounce is just insane to me. And so, we own the 4th largest silver mine in the world. And I don't think it's unique to us that these mines are being so profitable. But I also think that people are not understanding the level of profitability we're seeing. The other day, today, actually, I was curious to see, are mining companies expensive? I was trying to answer that question myself. And so I went there and I start checking what prices they're trading today, valuations relative to how much money they're making. And in a lot of ways, back 1 or 2 years ago, we used to make those assumptions and say, well, looking at the estimates of earnings, these things are very cheap. Guess what? The realized earnings of these companies are coming in so high that they're cheap historically today. And I don't think that's going to change anytime soon. The biggest question for a mining company today is, how do they secure their cost structure so it doesn't impact their margins in the future? So what am I saying? Like your gold to silver, your gold to oil ratio, your silver to oil ratio, try to hedge your energy cost. Hedge your energy cost at all costs, because that's your biggest risk right now. I do think that that's your biggest risk as a mining company. And so it is, we are in a wonderful environment. It would shock me if we're not at all-time highs in 6 to 12 months in silver. It would shock me if we don't go to crazy levels in the next 12 months, meaning substantially higher than the prior peak levels in silver prices. So I think this is one of the most exciting times I've seen in my career to invest in this space. I do. And I think it's happening already. I think a lot of these countries, including China, are buying well above the silver price today. They're paying a premium to accumulate the metal right now as we speak. We're seeing this in our own mine. We see this in other mines. It's happening across the globe, and people are not paying attention yet. Well, I think that a lot of people try to consider the idea that we're going to go back to the age of having gold and silver coins, or we're going to be going to Whole Foods and buying milk with. No, that's not what I'm saying. I just want to be clear. I don't believe in that. I don't think we're going to go there. So I just think that the value of the metal, once you start looking at the valuation of the metal as a monetary asset, it should not be 80 times the price, or have an 80 ratio with gold prices today. That's just incorrect. And if you are operating under that assumption, and so I think it would be normal to see sub 40, sub 30 in that gold to silver ratio. And if that's the case, you start making assumptions of what prices would be. And silver is extremely volatile, so it won't be as stable as gold. I mean, we're going to see big spikes and big declines. So, you got to be very careful of how to manage a portfolio with that type of exposure. But today we're, just extremely cheap and just gaining momentum for a major breakout. And once we see that, we could see triple digits in silver. I mean, yes, it would be very plausible to see that, in my opinion. A lot of catalysts. I mean, I know the silver market is so small. It's so small that it could easily, see quadruple or so from these levels, and it the same way as the mining industry as well, right? I mean, if you look at the entire, including gold, if you look at the entire precious metal space relative to the overall market, or the overall amount of net worth out there, these markets are just very small relative to real estate and the bond market and the equity market. There's the private equity market. I do think that the entire space of precious metals is way too small relative to the number of imbalances we have worldwide. So it would be very possible to me that the silver would go to triple digits, and not low triple digits. It could go much higher. And the same thing applies to other, I don't want to be saying this only specifically to silver, because I think it applies to other things as well, not just silver. Silver just happens to be so exciting for a lot of reasons, because we know it's being used in an industrialization side as well. So if you think about the AI arms race, the onshoring, and this gold rush happening across central banks that could include silver at some point, it just makes you, think about optionality, right? I remember speaking with a very intelligent investor one day, and he said to me, what I like about gold, this is years back, what I like about your thesis on gold, he said to me, is that there's so much optionality for that to work. Mm-hmm. And going back to that, I mean, how much optionality we have on silver prices today. You can make the case, just because gold to silver ratio is too high, silver is cheap. You can make the case that silver is been very useful for lots of industrial purposes, and it should be a lot higher. You can make the case that just because of inflation, hard assets should be higher, and silver is too cheap. You can also make the case that because central banks may one day buy it, silver should be a lot higher. And then you can talk about the monetary side of it and all that. And so there's so many angles you can go here, and none of us know how to perfectly model this. But I guess, wake me up when gold to silver ratio is at below 40, 30 or so, and I will revalue my thesis from there. Look, these things could happen here and there, right? And the same way as you can see manipulation in other markets, ultimately, price will reflect its intrinsic value. And I firmly believe in that. And in the case of silver, if that's what's happening, ultimately, that's not going to, it's going to be very difficult to suppress that. And we're going to see something crazy. I think that a lot of people, look, I don't want to get into the specifics of that thesis, but I do think that it's, I think silver ultimately will be driven by its intrinsic value and not because of manipulation. I think that doesn't end well, and in terms of price movements, and most likely that, if anything, that would only increase the likelihood of seeing an explosive move, so to the upside. So yeah, that's, I guess you can add that to your optionality idea, and of another thing that could add to silver prices going up a lot.
The outlook for both gold and silver highlights the significant potential that remains in these markets. While gold could see explosive revaluations if central banks increase their balance sheet exposure, silver continues to build momentum from historically cheap levels, setting the stage for powerful moves ahead. Navigating these opportunities requires patience, perspective, and careful positioning. However, the rewards can be transformative for those who understand the cycles. Stay informed, stay disciplined, and keep building your knowledge. Stay informed, stay prepared, and make sure to like, subscribe, and share your thoughts below.